for joining us for our webinar today, Improving Profitability and Growth in Your Dental Practice. Before we get started, I wanted to mention that there's a chat feature for this webinar, and you can ask your questions at any time during the presentation. The chat button is at the bottom of the PowerPoint as you hover over it. We will answer all the questions at the end of the webinar during the Q&A portion, but feel free to ask questions via chat as you think of them. Our presenters today are Andy Slinger and Laura Zock. Andy and Laura are both CPAs and principals with SVA's Dental Services Group. They provide advisory, accounting, and tax services to dentists and their businesses. They work with dental practices of all sizes, from solo practices to group practices with multiple locations. Andy and Laura use their knowledge of the dental industry to help dentists on many aspects in their practices, including our topic today, improving profitability and growth. And with that, I will hand it over to Laura to get us started today.
Great, thanks Jennifer, and welcome everyone. We're glad to have you join us for today's session of our 2020 Dental Webinar Series. Can you believe it? We're already 45 days, nearly 45 days into the new year, 2020, a new decade. With January behind us, now is a good time to reflect on those professional and practice goals that you set for the year. What's their status and what you and your team can do to achieve them. Chances are you've got some great goals set for the finances and profitability of your practice, and that's what we're here today to discuss. Today's webinar topics are focused on sharing strategies to drive the growth and improve profitability in your dental practice. Today we've grouped these strategies together into a couple different approaches. We're focusing on what we're going to call top-line strategies. These are the strategies to increase and drive additional revenue into your practice. Middle line strategies, that middle line refers to the middle section of your financial statements where you keep track of all your different overhead expenses. And then various bottom line strategies. This bottom line section here is where we can talk about how you improve the profit that's available to you as a dentist within your own dental practice. So with that approach, we're going to jump right into what we're going to go through for the top line strategies. And here, when we talk about top line, that's all the revenue that's coming into your practice. That top line is an accounting term that we like to use for formatting our financial statements. So think about all the revenue coming into your practice from your insurance payers, from your patients, et cetera. And so these strategies really involve making sure you're getting good reimbursements and that you have appropriate fees charged. But we can also look at some strategies that are around bringing additional revenue into your practice by growing, and then also some ideas about improving the productivity and efficiency of your practice to really maximize your profitability. And the first one we're going to talk today about is your fee schedule. Revenue is driven by both your fee schedule and also your insurance contracts. With the fee schedule, we want to make sure that you're reviewing your fees at least every year. It's the best practice, and making sure that you are at least at market rates. How you do this is going ahead and comparing your fee data to comparable fee survey data for your marketplace. You want to make sure that your fees are at appropriate levels for your area. The last few years here in the Madison, Milwaukee areas, we've seen practices implement annual fee increases in that 2 to 3% range. If you haven't revisited or looked at your fee schedule in a couple years though, you're going to want to make sure that rather than giving a blanket 2 to 3% increase, you're checking that your most frequent services, the fees for those services have appropriate fees. Because chances are if you've fallen behind on updating your fee schedule, it might take more than an overall 2 to 3% fee increase to get your fees back in line with the marketplace. What I have here on this slide are some of the 2020 Madison area averages for the fee schedule for the fee survey data that SVA puts together each year for what we're seeing charged in the marketplace. Right now, your adult pro fee, average fee in this marketplace is about $112. A child's pro fee is about $86. For crowns, we're seeing an average of just under $1,350. And for a two-service composite, there's quite a bit of variance right now with what local places are charging for these fees, but the average is currently right around that $291 mark. When you're looking at your fee schedule, something we also want to consider is your payer contracts. Pay attention to your payer contracts. We want to make sure that your fees are set so that you're maximizing the maximum amount that your insurance contracts are going to pay you for this valuable services that you're providing to your patients. Some markets, as we know, are very PPO heavy, and in those marketplaces, it's a little bit harder to maximize your reimbursement, but there are plenty of areas out there yet that still have fee-for-service clients, and there's a lot of opportunities within there to be able to make sure you're maximizing your top-line revenue. Next, we're going to look at an example of what it can look like on your financial statements with your ratios if your fees are too low. This really shows here the power of your fee schedule. What I have on the far right is what we're calling an average practice. We would consider an average practice to maybe collect about $1 million of revenue in a year. And that average practice has overhead of about 60% or $600,000, which leaves profit of about 40% or $400,000 available for dentist compensation. Now, if your fees are low, if they're 10% below average, your collections are also going to be low too. And as you can see, your benchmarks and your ratios are going to reflect it. In a situation, if your fees are below average, your collections are also going to be below average, but your overheads remains the same at $600,000, and your profit then is shrinking. You're only making $300,000 in that practice compared to $400,000 if your fees were at least up at marketplace. So I thought it would be helpful for us to put some numbers to this example and really see some of the power that we can put into play here by making sure our fees are appropriate. There's also some other strategies that we can consider that are focused on increasing revenue, and one would be growth in patients in your patient base. If you haven't already, it's a good time to consider implementing and starting up a dental membership plan. There are many reasons to consider a dental membership plan, including it takes the excuses away from patients. It's an affordable alternative to dental insurance. So what we're doing with a dental membership plan is we're helping remove that barrier that patients see when they don't have insurance to come to you and have their dental care taken care of. How the membership plans are set up also increases patient loyalty. The incentive is that the patients want to stay with the practice, they've paid their fee, they want to make sure that they're coming in to get the value for the annual membership fee that they've paid. They're easy to set up. Most practices have the resources available to set up a dental membership plan, and they're easy to implement as well. We also like that it puts the patients in power because the responsibility of scheduling an appointment is on the patient, and they've prepaid for their services. We've also seen that practices are increasing acceptance rates when they implement a membership plan. One of the components of a membership plan is to have a discount associated with work outside of the normal services that you provide, like restorative and cosmetic work. And so we're seeing more patients say yes when they do have a discount on those services versus paying 100% out of pocket like they had been before the membership plan. We've also seen it as a great marketing tool for new patients. When you offer a membership plan, you can advertise it on your website and help bring members into your plan, into your practice by offering this. The other thing about it that's great is it helps create consistent income. When you're taking regular membership applications and signing up people to the dental membership plan throughout the year, you're creating some consistent cash flow. So what is a dental membership plan? A dental membership plan is office specific. It's specific to your practice. Patients who are members in your plan can only take advantage of the plan benefits at your practice, at your own office, because it's not insurance. That's one of the key things of a dental membership plan, is making sure that you're setting it up so that you're not needing to follow the OCI or Office of Commissioner of Insurance rules. That you're setting it up in such a way that it's a dental membership plan, not viewed as insurance. So when someone signs up for your plan, they can't transfer their benefits to another practice because that would be more like insurance and not an actual membership plan. With a dental membership plan, there's a set fee per member, and this set fee per member covers their preventative and wellness care for the year. So their dental exams, their cleanings, and the necessary x-rays for the year. The participation in the plan can also give members a set discount on other services as well. Typically, we see these discounts range between 10, 15, and 20%. Another thing important with the dental membership plan is that you set different rates for children or your perio patients, as you know, since perio patients do come and see you and have more work done throughout the year. Some offices will often implement a discount for families that sign up for the dental membership plan too, to make it more affordable for families. So the dental membership plan concept, there's a lot to go through with this. We have a whole separate webinar about it coming up. So for more information on that, you can reach out to Andy or myself. We can help you talk more about it, or you're welcome to look for our future webinar on it. Another way to improve the success of your practice would be to consider adding an associate. This is a complicated question, but when is it the right time to consider an associate? It's a question we get a lot when we consult with our clients. And the answer to that really involves around what is the owner dentist looking to accomplish? Is it the fact that they have a growing patient base and they need more help? Or is it someone who's looking to cut back on hours worked or is nearing retirement and looking for an exit strategy? Really, if I had to boil it down, I would say a good time to consider an associate would be when you feel like you need help. When you are thinking about adding an associate, some things to think about beforehand are, remember that a new associate requires a good investment of not only your resources, but also your time to bring them into your practice, get them up to speed, have them meeting with your patients. You're also going to want to make sure that your practice is growing and increasing by adding an associate, especially if you're not looking to cut back on your hours worked or if you're not looking for an exit strategy. So if you're looking to grow the practice, what you're going to want to consider is what does your practice look like, and do you have the volume to handle adding an associate to your practice, knowing that you likely want to keep up your own same level of services and income. So when we think about a practice and we consider that average dental practice that has, maybe $1 million of collections per year in annual revenue, that practice probably has about 1,800 to 1,900 patients, active patients on their books. That type of practice needs to pick up 15 to 20 new patients per month just to maintain their current revenue streams and profitability. Because if you think about it, you probably have some patients leaving each month, whether it's going to a different provider or a change in insurance or moving out of town or death. So really, like a mature practice, just know that, when you look at your new patient counts, you need to have about 15 to 20 per month just to maintain your practice. So when we think about growth and what kind of levels you might need to add an associate and really grow the practice versus maintain the practice, when you're looking to grow from 1 to 2 dentists, you're probably going to need about 40 to 50 new patients per month, every month, to keep both yourself and that new associate busy. So a couple things to keep in mind on that associate topic. Our team at SVA Dental Services can help you and your practice navigate through that decision and analysis involved with deciding, is it time to add an associate? We can help you recruit for that position, set up the compensation package, et cetera, as well. We're here to help. So now that we've talked about some strategies for adding to the top line via growth strategies, let's now talk about another revenue generator, your hygiene department.
Thanks, Laura. Yeah, it's amazing. If you look at your income statement, your revenue might be reported as one line, but look at all that goes into whether or not you have the healthiest top line possible in your practice. So you really have to monitor hygiene production, okay? We're going to look at an example in a minute, but first we look at what is your hygiene ratio, okay? And we're going to tell you why those ratios are important, but your hygiene ratio is your gross hygiene charges compared to your gross hygiene wages. And your goal should be a minimum of 3.5 to 1, and we see them as high as 4.0 and higher, okay? And you want to look at these as a practice in the aggregate, and you also want to look at them individually, hygienist by hygienist. So what affects this ratio if it's not as good or it's really good? The length of your hygiene appointments, how many broken appointments you average, inefficient scheduling, where your hygienists are on the pay scale, whether your hygienists truly just do hygiene or if you have them doing other work in the practice, vacations, holidays, sick pay, overtime, those can all affect this ratio positively or negatively. It's a big deal because if you can take your hygiene ratio from 3.0 to 3.5 in a solo dental practice, that can be $50,000 of revenue that could fall right to the bottom line. Okay? So let's set up the example, and first it's the assumptions. Okay? So again, standard practice, 4 days a week, 9 hours a day. Okay? 46 weeks in the year, 8 patients per day, 60-minute appointments. 1 broken appointment every other day, hopefully. 5 adults, 2 kids, 1 perio, couple bite wings, panel, couple fluorides, okay? Conservatively, okay, if this is the setup, you can average $225,000 of annual production. And that's conservative based on these estimates, okay? So, establish that baseline. Now let's really look what that hygiene ratio can look like, okay? Side by side, we have a hygienist making $31 an hour, and like you're probably seeing today, hygienists making $35 an hour, okay? So in the first example of $31 an hour, okay, in order to reach a ratio of 3.5 to 1, you need gross hygiene charges to be at least $205,000, okay? If it's the other example where your hygienist is making $35 an hour, okay, you're not going to cut it at $205,000 of charges. You're going to have to, if you do the math, you'd have to get that up to just shy of $230,000 of production in order for that ratio to be 3.5 to 1, okay? As I mentioned, it's really important to know and be aware of what your hygienists are doing. So just to make you aware, your hygienist should be doing hygiene, and they should be doing hygiene, and oh, by the way, they should just do hygiene, okay? Your hygienists are not ordering supplies. They're not working the front desk. They're not assisting. They are your most expensive employee, okay? And if you think about it, they're the only other revenue producer in the practice. So we need to keep them just doing hygiene, okay? So now you've monitored your hygiene production. Now let's look at doctor productivity, because it really builds on it. It just builds right on your hygiene productivity. So what is your doctor ratio? It's your gross doctor production compared to your gross hygiene production, okay? In a practice, we want that ratio to be at least 2 times, okay? Your doctor production at least 2 times your hygiene production. If you're doing a lot of high-end cases, you know, that could push 3 times, okay? It just depends on your procedure mix. Again, just like improving the hygiene ratio, you improve the doctor ratio from, for example, 1.7 to 2, could be $100,000. It drops to the bottom line. You have to schedule for the big procedures. You can't just do hygiene checks all day, okay? You really have to have a good mix in your schedule. We're going to look at the effect of poor scheduling, broken appointments, and you got to have a very healthy hygiene practice, because you cannot propose treatment to a patient who's not in the chair, okay? So let's set it up, all right? Typical solo practice, you got 2 hygienists. They're each very conservatively producing $205,000, total of $410,000. Multiply it by that 2.0 ratio, you're producing $820,000 as a dentist. And I'm well aware that many of you are well north of that number, but again, we're just being conservative with our numbers. You do the math, if you're working 184 days a year on average, the same days as the hygienist works, that's a goal of just under $4,500 of production per day in your practice. So is your schedule, is your practice set up so that you can meet that daily production goal? If not, then you need to look at your schedule mix. All right, so what is the big deal with these ratios? All right, if you want to consistently be in the top 25% of your peer group, from a profitability standpoint, these ratios are in line. You know, over the years, we've compared these ratios, and your top 25% of practices, these ratios are in line. I can't say it enough, you have to have that healthy hygiene practice, okay? The doctor production just builds on it. You cannot propose treatment to people who aren't in the chair. You got to get them there, okay? So, next, okay? What can affect this ratio? One of the big ones is scheduling, okay? And you might have, 60 minutes on average. You might have a 50-minute appointment, 45-minute appointment. You have to determine what's best for you, okay? If your hygiene appointments are too short, you're going to be run behind all day, and you're going to have staff staying late. If your appointments are too long, you're going to have very expensive staff with a lot of downtime. So make sure you consider the right appointment length for your practice, okay? Broken appointments can be a big problem, Okay, so again, I think most practices are well versed, but make sure you are using phone calls, email, text for reminders. We got all different kinds of methods these days. Find out what works for your patient base. And your staff should be actively trying to fill those cancellations with that short list of people that are willing to move their appointment. Okay? All right. As far as the top line, this is really your final top line check. All right? So if your office is just not performing, if your ratios are not in line, first few things we'd recommend. Look at your fees. Okay? Are they in line with the service, the value you're providing your patients? Is your length of appointment appropriate? Okay? Is it too long? Is it too short? Scheduling, do you have too many broken appointments? Okay? Are your appointments for children at 30 minutes? And compare your hygienists. You'd be amazed. You know who your ringer hygienists are, so look at it. You know, who's performing at those ratios, who's not. Okay? It's always good to incentivize your staff. And set those daily production goals. You know, make sure you have them so you can actively be monitoring whether you are meeting your goals. All right, Laura, should we move on to overhead, or what we like to call the middle line?
The middle section, yeah. The middle line here references that middle section of your financial statements that you've formatted in that way so that you can see all of your overhead categories. The overhead categories don't include associate or doctor compensation. It's all of those other expenses that you need to maintain and run your practice. When we look at managing the middle or managing the overhead, what we like to benchmark to is what your national averages are in terms of a dental practice's overhead, which is between 60% and 62%. So that should be your goal, is to manage your overhead. So for every dollar of revenue you've collected, 60 cents or 62 cents are going to your overhead, and the remainder is available for doctor compensation. So let's take a look at what that looks like. In simplistic form here, we have the main categories of overhead of a dental practice. And this is the costs that are in the middle column there. That's the cost if you are in line with ratios with what that expense would be for $1 million top line or $1 million revenue per year practice. As we know, your biggest categories are your people. Hygiene salaries should be running about 10% of your revenue, or $100,000 in this practice. Assistant wages, 7%, office wages, 8%. So about 25% of your practice overhead, or of your revenue, goes towards wages, and by the time you add on payroll taxes and benefits, it's nearly 30%. When we look at some other important ratios or benchmarks for other categories, your occupancy expense, so this is the cost for your space, your real estate taxes, your rent, your common area maintenance, we want to make sure this isn't over 9% of your total revenue collected. We tend to see between 5 and 9%, 6 to 9% in this category. A lot of whether it's 6% or 9% depends on the newness and the updated and how updated your space is. Lab, we see between 6 and 7% of your revenue. This is a number that we see fluctuate greatly depending on what you do in your practice. If you have a steric machine and you use it pretty well, your lab might be more like 3%. If you're doing a lot of high-end cases, your lab might even be higher than that 7%. The next big category is drugs and supplies. You should be able to maintain that expense so that it costs you about 6% of every dollar connected. Then all of your other expenses, everything else you need to maintain your practice, so things like insurance and professional fees, those will add up to about 9%. So here's how we get up to that overhead being about 60% of your practice. So how do you manage your overhead expenses? The first thing you want to do is format your financial statements so that they are laid out in a way that you can quickly look at them every month and see where are you in line, where are you out of line, so that then you can address the outliers and make some changes to make sure that you're meeting your goals. We recommend that you prepare and review your financial statements on a monthly basis. That's the best way to be able to stay on top of things and see recent financial trends. And then go ahead and analyze your overhead expenses, compare to your prior months, prior years, and see where you're trending and why, and see if you can make some changes there. We always start with the biggest dollars. It tends to be that staff wages category, and then follow your benchmarks every month. And when we look at that staff wages category, as Andy mentioned, those ratios are really huge. And those hygiene productivity ratios, a big component of that, on whether you're at that 3.0 or that 3.5 or that 4.0, a lot of it's how much are your hygienists costing you. And what we're seeing in the marketplace right now is hygiene wages have been driven up quite a bit because of the competition for those open positions, or competition for the hygienists themselves. Also, sometimes you might see that your staff wages are higher than they normally are. That might be because you're working more and you're paying your staff overtime. Most of your staff are hourly, so overtime's 1.5 times their normal rate. So we always encourage the practices that we work with to minimize overtime as much as possible. All right, last but not least on the staffing, what I wanted to throw up here is typically what you might see for staffing levels for that average $1 million practice. It should have 2 hygienists, 2 assistants, 2 front office people, for 1 dentist, so 7 total employees in your dental practice. And if you are at a group practice, you can take that $1 million mark and multiply things out from there. $2 million practice is probably going to have 14 employees. All right, so final overhead check. You know, we always like to say pick off the big ones first and focus on those areas where you're spending your most significant dollars. And last but not least, after we've collected the revenue, minimized our overhead expenses and maintained those, we're looking at dentist compensation.
All right, thanks, Laura. So let's say you've done everything right. You got a healthy top line, your overhead is in check, you got a great formatted financial statement, and you got a very healthy profit that's dropped to the bottom line. What do we do with those profits? How do we get more out to the dentist owners? Or, conservatively or in tandem, how do we pay less taxes? Okay? So, first thing is, does your practice have a retirement plan? Are you using it? And not just does it have one, is it the right plan for you right now? When was the last time you checked? Maybe when you started practice, it was a simple plan. Then you went to a 401k plan. There's a lot of ways to get more money into your retirement plan, and as a result, pay less in taxes. One of the biggest questions, obviously, we get is how do I pay less taxes? 2 biggest tax planning opportunities: maximize your retirement plan contribution, maximize your allowable professional business expenses that you are submitting for reimbursement. So are all your CE expenses paid by the practice? Anything you're paying personally, the practice should pay. Best practice, have a business credit card. All your business expenses go on there, you get it at the end of the month, you submit it, it's paid by the practice. You got nothing to worry about, okay? Next thing we see is you might have a great profit, but there's no cash. I got profits, I don't have any cash. So maybe it's time to look at that balance sheet. You know, maybe it's time to restructure your equipment loan. Maybe it's time to get a line of credit. We like to say a line of credit, equipment loan is the cost of doing business. So if you're looking to get those profits out for investment, you might have to look at your cash flow and that debt structure, okay? Now, a whole separate topic is tax planning. But you need to make sure that if your goal is to minimize what you pay in taxes, that you're looking at the various opportunities that are out there for you. There's a brand new qualified business income deduction, or known as QBID. Depends on your income, but that's an opportunity for you. Depreciation each year, should you accelerate, should you not? That's something to consider. If you're an S Corp, are you paying enough out as S income versus W-2 wages? All depends on having reasonable compensation. And last but not least, just being brief with tax planning is your entity selection right for you right now? Again, maybe you started out as a sole proprietor, but maybe it's time to convert to becoming an S Corp. It just depends on where you are right now. Where I wanted to end, since it's such a big topic from a tax planning perspective, is this time of year, as Laura said, new decade, new year. What are the new retirement plan limits, okay? A lot of you are making IRA contributions, maybe doing a backdoor Roth. So depending on your age, that limit is still $6,000 or $7,000. The 401k deferral opportunity went up $500. If you're under 50, the catch-up went up in total $1,000. And you can see the profit sharing and the related comp limits have also gone up slightly compared to a year ago. And any of you are wondering how much of your wage base is subject to Social Security taxes, for the new year, it's $137,700. All right. So with that, I think we will open it up to any questions.
Yes, I wanted to remind you, if you have any questions out there, you can type that into your chat box and we will be sure to answer. Let's start with the first question that came through. How can I have my retirement plan analyzed?
All right, I can take that one. Basically, you simply would start with the last year contribution that you made, okay? And we here in-house, we can take a look at that. If you have a third-party administrator, we can partner with them too and simply have a conversation with you of what the goal is, how much you're looking to put away, what the strategy is between what you're looking to put away for yourself versus your staff, and, really give you some options to see what works for you right now.
Oftentimes, the thing I find helpful too is have a couple different scenarios run. Maybe you're in a position where maximizing your retirement contribution for the year, which is, $56,000, $57,000. Maybe you're not in a position to do that this year, but we can work with you to figure out what, given the amount that you can do, what is the best way to do that.
All right, next question. What trends are you seeing in hiring, retaining staff?
This is a popular question right now. I almost feel like I should have a little side job as an HR consultant, but it is a challenge right now. I mean, this is a tight labor market, and, staff know that, they potentially have the opportunity to make more money or get better benefits at a competitor. So, having conversations with your staff, making sure that the benefits you're offering are what is most important to them. I think the more open you can be, the better. But yeah, right now, there's a lot of movement going on. There's a lot of upward pressure on wages and benefits. And obviously, as we showed you, it's having an effect on your ratios and it's having an effect on your overhead.
All right. So we are at our 30-minute mark that we've allocated for this webinar. Wanted to say if anybody has any further questions for Andy or Laura, their contact information is on their screen, so feel free to reach out to them at any time, and they will be able to help. I want to thank Andy and Laura for this presentation today, and for all of you for joining us. I hope you have a wonderful day. Bye-bye.